Hello everyone and welcome to the very first FinTech A Year in Review from Razorpay. I'm Varun Achar, a Director of Engineering at Razorpay, and I got together with some experts from the field of AI, UX, regulatory tech and security for a roundtable conversation where we talk about all the emerging trends in the engineering world of FinTech. So let's cut to the studio where we'll start with a quick round of introduction.
Hi, I'm Kamlesh. I work as a principal front-end engineer in the platforms teams at Razorpay, working on design systems and infrastructure tools.
Hello, my name is Pranjal. I'm a staff engineer in the data science team at Razorpay, and I've been working in the AI domain for the last 8 years.
Hi, I'm Ashwath. I work as a principal engineer in the security team. Worked with Microsoft and Synopsys in the past. I like working on cloud security, infra security. I've touched on quite a few areas in security. Pretty excited to be here.
Hi, I'm Nemo. I'm a founding engineer at Razorpay. I'm a public policy enthusiast, and I work with tech, security, and open source.
So, Pranjal, let's start with artificial intelligence, right? That's the new hot thing which is taking the internet by storm. We're seeing ChatGPT becoming more of a utility in the creative space. Are we seeing some innovation in artificial intelligence where we can expect such tools to come in which will help in the fintech domain as well?
Sure, Varun. So I think a very clear use case that is coming up is FinOps. There's a lot that AI tools can do in supporting and streamlining the FinOps. For example, we can process a large amount of data now and find trends that are not really visible to the human eye. And by doing so, we save a lot of cost and time for financial professionals. So let's take a very simple example, right? Do a routine FinOps task like reconciling invoices or finding duplicate payments or trying to figure out if there is a attack. In all these cases, it's very difficult to do it manually. I think AI can do all of that automatically at scale, and what that allows is a lot of cost saving for the company and time saving, and there is also a reduction of risk, right? So with all this, I think there are a lot of tools that we can expect. And as for the ChatGPT part, it's a very beautiful system, I would say. I think you can imagine something like a Tableau or a Looker with a ChatGPT type agent built in. And what you can expect is you can ask the agent in real time about, let's say, forecasts or insights about financial data, and that will be probably the future of how we interact with data.
So awesome! That's super exciting. I can't wait for these innovations to come in and change the way that fintech is delivered to consumers across the world. One of the things which is super important is how do you train these models? How do you get access to so much data to be able to get accuracy right, because that's super important when it comes to AI, right? Because if you get it wrong, you could potentially be denying access to credit to somebody, or you could be you could have security lapses, etc. Right? So, what are ways in which what sort of things or tools are we seeing being used to ensure accuracy of data?
So I think that question can be split into two parts. The data part of it is something that we can handle separately, but let's talk about the AI part, the models, right? So with bigger models comes bigger problems, right? That's the theme. So what happens is traditionally we have been using a lot of basic models like regression and tree-based models and a lot of stats to find use cases in fintech. But nowadays these big box black models are kind of changing this system, and to do something like a KYC or to automate any process, we need these models because they're exceptionally good at handling text, video, and I don't know, image data, let's say. And because of that, it's kind of getting difficult on the observability and explainability side, because these models are kind of designed around how our brains function. So like you and I cannot really think about a specific neuron in our head when we are making a decision. So is the case with these models. It is very difficult to pinpoint why a particular decision was made. So what I assume is that in the fintech industry, a lot of companies will continue to use these models and it probably enhance its use cases. But at the same time, they'll not put a lot of weightage on how these models are used. So because regulatory tech does not allow that, right? So this is like a split approach. We'll continue to use them, and in parallel, we'll hope that research with time can deliver some explainability around these, so that we can guarantee automation, accuracy, precision, and other metrics that we want from our models.
So what are the current tools in use in the AI space? Like what's the in thing in 2022, and are we going to see something new in 2023 that engineers and everybody else should be keeping their eye on?
Yeah, I mean, so I think this is one of the most fastest growing space, right? In the last decade, we saw companies like Facebook giving PyTorch and Google giving TensorFlow, right? This was handling the software side of things, the back end of AI. And then companies like NVIDIA and Intel was providing chips, right? The Tensor chips, which are very efficient at computing. So what I see is a lot of companies that came in 2022, like Hugging Face and PyTorch Lightning, what they did were they are an abstraction layer or sort of a wrapper on top of these complex modeling techniques so that somebody can use them directly. I think that in the next year there'll be a lot more domain specific use cases, right? So people will be building Hugging Face for fintech, let's say for specific forecasting issues or anomaly detection or money leaks for that matter, right? And there is like another example that I really like. So what can happen is we can start putting AI on data management and storage layer also. Redis AI, which is basically an engine by Redis, what it does is that it provides all these AI capabilities while you just onboard with the data storage layer, right? So you can do anomaly detection, knowledge graphs, and recommendation systems right where the data sits. So it's kind of connecting data and AI together. And I think that's kind of the way forward in 2023, where we'll see a lot of companies building something very similar.
With the advancement in AI specific processors like TensorFlow and all, and even phones getting AI specific chips, right? So how has that impacted the way that fintech is delivered?
I think the impact is yet to come, but let's take a look back, right? When we think about our phones, Google, Samsung, Apple, right? They all have these AI chips inside, and we use them daily with our cameras. This magic eraser, and there is so much going on with these AI chips. And you can think of Tesla, right? That's practically a mini supercomputer on wheels. So I think these chips are changing the way we consume data and process it. And what that allows is called federated learning, which basically means that we don't need to pull somebody's data on the cloud. What we can do is we can send the model to the data, and the model will be computed there given these new AI chips. So I expect a lot many devices to be embedded with these AI chips in the future. Let's say a POS device for payments, right? That can happen very quickly, and that will allow a lot of safe use of digital money transfer. And my personal favorite, I think, is the DigiYatra app that the government of India just enabled for airports, wherein they've just automated the part when you queue up to go into an airport. Right now, you can just upload your boarding pass and walk in, and it'll do facial recognition and allow you to pass. So such embedded devices will definitely change how we use devices in fintech, and I think AI chips are the core to it.
I think the UX of these things are getting influenced by AI increasingly, right? Like you mentioned about how facial recognition is being used for boarding and check-in at the airports, right? So I think there are two areas which are already in widespread use, which is a mix of AI and UX, right? Which is areas of conversational AI, and now KYC is also being used in these areas. So Kamlesh, what do you see this? How do you see this intersection, and how is it changing things?
Yeah, so I think what this has enabled people is that they can do their identification process right from their sofas at the home, right? And the reason why this has been capable is how our browsers have evolved. And because of that, people can just identify themselves by just using the cameras which are right on their phones or their laptops. So now because of that, they don't have to visit, let's say, the physical branches or the locations to complete their identification process. So it's obviously showing a great impact, and of course a lot of people are liking it, and which has also enabled the companies to onboard more and more people and reducing the cost of their on-ground forces.
That's really interesting because KYC is now, like, I don't think I've found interacting with banks and all as easy as it is today, right? With everything being digital and everything can be done on the phone. Now, I think the big area here is how the browser itself is changing and enabling these experiences, right? So and the new thing that's been visible in the last 2-3 years is what you talked about, which is digital banking and how neobanks are coming up in the forefront, right? So I want to get a sense of what is the difference between the experience that you get from neobanks, right, and how is user experience playing a critical role in the adoption of neobanks?
Yeah. So these neobanks are kind of digital banks where they don't have their physical locations, right? Now, because of that, people again can just sit at their home. They allow people to just open the bank account in a matter of few minutes, and they can just start transacting. Now, imagine if we talk about an like couple of years back where you have to visit a bank with like bunch or dozens of documents, get your verification done, and then they would be like, okay, you have to wait 24 hours to get all your transactions done. Now, that is where neobanks kind of play an important role.
Yeah, awesome. So, the UX of cash is getting increasingly, inferior when it comes to, money movement. Are there other things that fintech companies are doing to sort of increase this gap?
Yeah, so there are two things that are happening. The primary thing is the companies building things for other companies, right? Let's say if today you want to start your own venture, now you don't have to focus on a lot of things, right? You would just say, okay, I want to get the business started, but I would rather borrow or pay for services for things like accepting payments on your website. Now, there are companies who are also who have been expertise in this area where you can just pay them and use their infrastructure as a service to accept payments, and you can just get up and get the ball rolling on it and focus on your venture. So APIs, I would give this to like kind of an API infrastructure that these companies are building together, and then they're also offering that as services to other companies. So people can then complement each other and build on top of things where the consumers in the end are getting benefited.
Yeah, I think neobanking is also one area which is traditional, different from the traditional banks. It provides banking as an API. So it's sort of, once you have banking as an API, you can do a lot more things with your money, with your bank accounts and all.
We're also seeing APIs as a force multiplier in other areas. For example, with the recent account aggregator framework, we have scenarios where data movement itself is a force multiplier, able to letting a business decide and acquire your bank account statements to be able to validate your credit score, etc. And just having APIs that let you do it versus the older methods of doing it is much, much more efficient.
I think Ashwath has a very interesting story of what happened to him in China and how how the UX of delivering certain services is changing. So
sure. Yeah, so this happened back in 2019. A friend and I had gone there for work. We were traveling in a metro station. The next day happened to be like the National Communist Day. So there was like a random police check. So this guy was like, hey, where's your passport? I didn't have my passport on me. I said, I'll pull it up on my phone. He's like, no, don't worry about it. So he punched in his password. Then he took a picture of himself. Then he was like, he took a picture of me. I'm like, what are you trying to do? But there was a language barrier, right? So then he was like, is this you? I'm like, yeah, it's me. So then he was like, okay, did you enter here in 2017? Did you go here in 2019? I was like, I guess yes. Then he was like, okay, you're free to go, right? So a couple minutes later, I was just thinking through what happened, right? So just through a picture, they were able to surveillance, when I had entered the country first, and, they must have like immense data, and the data processing and the AI piece comes in like really, really handy there. And it shows like the real power of AI there, right? So yeah, it was like an interesting tidbit, but it was a little scary.
I think that's an interesting thing to consider from policy perspective as well. To what when we deal about facial recognition technology in today's era, or how do we balance the privacy rights of individuals with respect to, are you allowed to take photos of everyone in public and check their credit scores? We don't know. We'll figure out the answers.
Awesome. Yeah. So, when it comes to, again, delivering fintech experiences, like, are we expecting a new framework in 2023? Is React still king?
Okay, I'm not gonna do like a debate on this, but yeah, so far I guess React still stands out, but still there are other emerging frameworks like Svelte, Vue, and the likes. But I think the industry is now moving into a direction where companies are focusing more on the infrastructure, right? So that they can deliver experience, especially in India, to tier 3 and tier 4 cities. Like for an example, if today you enter a shop, right, a small merchant shop, where you see like a payment box where you just make a payment via UPI, and the box just says, okay, the payment received of like so and so amount. Now, if you imagine that the whole transaction or the cycle that it would take, right, it would be very huge in a traditional server kind of an environment. Can't be P2P. So the way the companies are adapting to this infrastructure is like edge computing is getting a lot of traction these days, right? Where people don't have to go to the server, but it could just go to a nearest edge network, right? And this is how these payment boxes are getting like real-time communications, where the message that you hear as soon as you make a payment is very instant or near instant, right? So those are the kind of innovations that we have been seeing over the past 1 to 2 years, and that has changed a lot of things, right?
I think one other thing that I've started noticing is how especially in the payment space, apps seem to be a lot more integrated. So there's a lot more work going on the SDK space. What's happening there?
Yeah, so if you look at it, like if I give you an example, right? Imagine if you are making, like if you are shopping on a particular, your favorite e-commerce website. Now, once you enter your card details, all of a sudden you are taken to a traditional bank page where the experience is not optimal, like to an extent where you see an OTP, but you can't autofill it into the input fields, right? That's very awful experience. Now, what the companies are doing these days is they'll give you an embedded SDK through which they will make internal calls to the bank page, but as a merchant, you could still maintain your user experience intact, so that once, as a customer, if I'm entering card details on the mobile application itself, I don't have to redirect to the bank page. I can, like, these companies, they can just give you that native look and feel that would make you feel that, okay, you are still part of that same application, right? So that in turn also increases your conversion rates, right? Because now there's no multiple redirects. If you're in a very low bandwidth environment, you don't have to pay the cost of loading a new page completely, where the customer reached at the verge of shopping it, right? And you just don't want to drop them off because of some security regulatory, or like having them to enter the OTP. Yeah. So that's something that these companies that we have been seeing. I'm not sure, like in last 1 to 2 years, I haven't, like, it's very rare that I actually get redirected to the bank OTP page.
Yeah. I think even on the UPI space, there's there's similar sort of experiences being built.
Yeah. So imagine that these days when you're conversing with someone, then you're like, okay, fine, I need to pay you, like, let's say $500. And you are like, okay, fine, just hold on. Then you just minimize your application, go to some other application, open it up, make the payment. But now things have changed, right? When you're conversing, let's say on WhatsApp, with the WhatsApp payment coming in, you could just make a payment there and there itself without even you switching the context, and it would just appear as if it's part of your conversation, which actually it is, right?
Yeah.
So those are the experiences that people are now looking forward to.
It's almost like cash, right? Like, hey,
Exactly,
I need to give $500, okay, let me take out my wallet and give it to you.
I love how you can like reply to payment messages and be like, hey, this is why I paid you, and there's an entire context.
Yeah.
You can react to it in emojis.
Yeah.
Yeah,
Absolutely. Yeah.
You rightly said, it almost feels like it's a part of the conversation,
Yeah.
right? You're not breaking the flow of thought or where what you're talking about. One area which with increasingly with FinTech being everywhere and how commerce is happening online.
Yeah.
One thing which is coming out is security, right? So
Yeah.
security and UX has always been in conflict with each other, right? You're obviously trying to make things easier for people to use, but you need some barriers to ensure consumers are protected, right? So what are the sort of trends that you're seeing here?
Yeah, so just to take an example, NPCI released UPI Lite, right, which allows you to make payment up to rupees 200 offline. But the catch over here is that you could not transact more than about 200 rupees, right? Because there are some security aspects that have to be in place since the payment experience is offline. So the checks exist. Similarly, the OTP-less transactions that you do on your bank cards, right? They are also capped at today 5,000, right? So it's again, if you want to give a experience, you also need to understand the consequences that it can also lead towards it. So I think Ashwath would have things to add from a security perspective as well.
Yeah, Kamlesh, I think you bring up a very interesting point, right? The special limit of the 200 rupees and the 5,000 rupees, so right? So I think if you look at it, fintech from like a security angle, it's all about risk management, where limits are added so that the damage control can be done up to that extent. So if you think about it from like a different term, blast radius is what we keep using in this world, right? So while you mentioned that, it was very interesting while I was thinking back, right? A decade ago or 10 years ago, back in my Microsoft days, making a WAF rule change was like a big pain, and it involved like 10 people coming together or having to go to the data center, where now it's just like, okay, people log into the AWS console, or it's a part of a GitHub PR where people go look at it and they hit done and it gets applied, right? So especially with like cloud and JavaScript based apps on the UX, I think uh, security comes as a part, or security features come baked in. So another example is, if you think about MFA, everybody uses MFA everywhere, right? So a decade ago, only special people had like RSA keys or UB keys that they would use, but now even my mother uses OTP, right? So it's gotten this much better because there's been a lot of innovation in security as well to make security kind of built into the product.
You mentioned about OTPs and MFA and all. These are all ways in which you're securing your account, and these are essentially credentials that you're using to log in, right? And I want to talk about passwords, right? I keep reading a lot about dark web and how password dumps are now in the news. So what's up with that?
Correct. So passwords are always like an interesting piece, right? So if you take a step back, it's basically identifying who you are as a person. So these days, what's happening with the dark web, and a lot of hackers are they constantly attack two things, right? So there are two different vectors. One vector is they go after enterprises and they try to extract data from there, right? Like open S3 buckets, or trying to hack into the servers, and then they get like a data dump. But the other new angle is also super interesting. So they go after end consumers. So there are malwares like Stealer malwares like Redline, which goes after Chrome browsers. And what it does is it tries to get all of the stored passwords on Chrome, both on the laptop and as well as on the Android device, right? So now there's the Google sharing of passwords, through which it gets a complete dump, and then it sends it to the malware mothership. And these malware motherships, what they do is they sort it by the fintech, or they sort it wherever they need money, they can extract money, and they put it up for sale. So that's also becoming like an interesting, weird angle through which passwords of end customers are getting leaked. So that's also like another angle that we have to look at now.
So in the last couple of years, you've seen the maximum number of zero-day attacks hitting the industry, right? And the most recent example being Log4j, which impacted everybody and not just fintech, right? So how are companies dealing with such things now?
Yeah, I think you remind me of like the sleepless days last year, or sleepless nights last year and weekend days. But I think Log4j was an interesting scenario, right? Because it was, so the first piece is, if you don't have an inventory, you don't know where you're exposed, right? So the first piece, inventory, was very, very critical. And for us, I think what we had kind of done was we had focused on inventory, but we added more ammunition to it, and we added more lights to it so that we could look at it from different angles. Then the second piece was, once we had like a good inventory piece, then the second piece was to look at it from like a supply chain angle. So one is, it's easy to fix the code that we own. Sometimes we are dependent on open source libraries, which we could still kind of push the developers, or we could go get our own PR and get it developed. But the most challenging piece is where we take in-house stuff like, say, Kafka or Looker or something else and host it in our environment, right? So we are basically dependent on them. If they don't release a fix, then we can't do anything, right? So that's where, going back to my risk management piece, you'll have to somehow kind of balance the risk. And there are always applications that are probably vulnerable, where you need to add layers around it and reduce the risk piece there.
When it comes to fintech, companies need to usually go an extra mile to ensure that they're meeting regulatory expectations. So how are fintech companies dealing with this?
Right. So so three pieces, right? So the first piece is around like the making developers self-sufficient, right? you can never scale because you'll have a large number of developers. You don't want to come in their way of development, right? Because it cuts down their development cycle. So you make them self-sufficient. So what we have done is we've integrated tools where we make them self-sufficient, and we also have this concept of security champions where they can also come in and understand what's going on and stuff. And the second piece is have tooling which will kind of find defects fast. Recently, the companies which do 80% coverage, but at 20% the cost and speed are the tools that everybody is going towards, right? For example, like SemGrep is a great example. So back in the day, static analysis used to take 5 hours, 6 hours. With SemGrep, it's a few minutes, right? Few minutes in the worst case with one of our largest repos. So that's I think where the world is also kind of heading. And the last piece is bug bounty, right? I think we are one of the companies that have gone public on bug bounty, where we treat the external researchers as our extended team, where we want to kind of collaborate with them and enable them so that they can help find issues and let us know and make us more secure.
So, what are the other emerging threats? Attackers are getting more and more creative these days.
Correct.
You mentioned a few examples of what are things which are visible from the last year, and what should companies expect?
Yeah. So I think the one keyword that I've said the most at Razorpay is DDoS. So DDoS still continues to be like a problem because of two reasons, right? One is the ease to pull off such an attack, where an attacker can go put in a credit card and they can pull off an attack, or pay a few Bitcoin and or a few quarters of a Bitcoin and pull off an attack. And the second piece is it can bring down availability. So it can really, if a company is not prepared, it can bring them down to their knees, right? So that's where I think DDoS is still like kind of powerful. And the second one specifically to fintechs and payment gateways are going back to the dark web example. There are a lot of credit cards that are stolen as well, especially from like the Chrome browsers and also other attacks. So hackers are putting up credit cards for sale, right? So then, there's another layer where there's a second group of hackers that purchase this data dump, and they want to find out which are the valid credit cards and sell it at a higher price, right? So it's like a domino chain. So the second set of domino chain, what they do is they have a very interesting attack that they pull off. They take all the credit cards that are stolen from like the data dump, then they filter it or find out what the valid cards are using payment gateways. So this is like another attack that we've seen in the recent past.
Is moving to cloud also resulting in some sort of threat vectors?
Yeah, so great question. Cloud provides like a lot of security features, and it makes development. So if you think about it from a developer lens, it makes development very, very easy, very fast to deploy, and you can scale up, scale down like no time, right? But at the same time, security is also very, very important. Because a misconfigured S3 bucket would mean like all your data is gone, right? A hacker can steal all the data and it ends up in the dark web, or they could blackmail you and stuff. So that's where we'll have to be very careful. So we need to really add defense in depth, where even if a breach happens, the damage should be very, very limited. That's the blast radius should be limited. Goes back to the old saying of assume breach and then move on.
I think one thing we've learned in the last 5 years in security in the industry has been that secure defaults are very, very important. For example, AWS recently rolled out a change where AWS S3 buckets are by default not public anymore, right? AWS S3 has been a product that's been there for, maybe 15, 17 years. And now is when we've felt that, this is the right time to make that change. It'll probably break some things down the line for a lot of the customers, but they are confident in making this change because today it is important that S3 bucket should not be public anymore. And we've seen similar changes in other scenarios as well, where databases have introduced security-specific features which are not there present by default earlier.
So, a lot of security is often reactive. Are there other sort of predictive ways in which we are trying to ensure we don't get breached? Is AI being used as well?
Yeah. So I'll take the example that Ashwath was talking about, right? DDoS. There's one silver bullet that the industry uses for DDoS, which is rate limiting. Now, the problem with standard rate limiting is that you fix a number and then you don't change it. So people find a way to bypass it. Nowadays, people are using data and model to kind of make dynamic rate limits, which can change with the traffic trends of the merchant. And by doing so, we are kind of protecting us in real time, and that's the proactive way of handling DDoS. And then I think there are many such model usages coming in where we can avoid multiple such attacks.
What are the regulatory expectations from security?
Right. So I think the recent changes in regulations, right, they've had like a very positive impact. So let's take the simple example of like onboarding and offboarding, right? Every single compliance check looks at it, and because of this check, it has forced a lot of teams when they're developing applications to go from that 92% to 100%, because you could still use like a username and password, but it makes it super difficult to offboard an employee once the employee has left the company, right? So it forces them to use SSO, like a single sign-on, where they just use their company ID for everything. And when auditors ask for proof, at least you can use compliance as a hammer to get that done, where you can push people from going to the 90 to 100%. Nemo, any thoughts on that?
I think regulations and security are always go hand in hand. For example, I always say that the 2FA mandate from RBI has been like the linchpin of Indian fintech industry for the last 20 years, right? And we're also seeing similar regulations pushing forward the envelope for security in some sense. For example, with India's personal data protection bill that's coming in, it has specific regulations that mandate how data transfers can be done between companies. So, for example, if you go ahead and buy a company, what kind of data transfers can you make? If you have a subsidiary in another country, can you transfer personal data from this country to that? Alongside that, the bill also mandates things like special significant data fiduciaries, which is not really clear in the bill right now. It's an open question, something for the government to fix. But hopefully, these will be larger entities like significant banks, fintech companies, who are holding certain class of data that is to be protected much more diligently. And the bill envisages certain additional protections that will be there for such companies. So I think like regulations are doing a bit to fix, and change how security functions in the real world in the fintech space.
More than anyone, it seems like the regulators are on a tear, right, to innovate in the fintech space, right? Number of things were launched last year, with two significant things being the PAPG license with and card tokenization. Are there unique business opportunities opening up because of this?
Yes. So I'd like to broadly split this in two places. One is where the regulator or the government pushes out specific bills, for example, GDPR in the EU, or with India's data protection bill that's coming up, and similar bills that we have seen pushing out from RBI, which change the landscape a lot by just stroke of a sign, right? And we have seen, for example, companies in the EU that have sprung up to enable companies to GDPR enforcement. So that's broadly what we call RegTech, where companies are enabling other companies to these kind of businesses better. The other area of innovation where we see regulators making changes is where they're actively pushing forward technologies. For example, in India, we have seen RBI actively pushing how MPCI shapes and changes the retail payment space. Similarly, we are seeing right now two pushes around ONDC and account aggregator framework, both actively from the state perspective as well as the regulator perspective, where they're trying to shape how payments will be made for across digital marketplaces in the case of ONDC, or how financial data transactions will happen in the case of account aggregator framework.
So, in India, we're seeing that, there's a running joke which says that every company in India is a fintech company in some way, right? So,
I was very surprised when Zomato started asking me how much, what kind of loans I want.
Yeah. Are regulations making, things easier for companies to jump in?
Yes and no. So there's one theme is embedded finance, which I think we've hit upon earlier, and it's going to be pretty big for the next couple of years. Where as a venture who's not necessarily dealing with fintech, fintech is always like a good tool in the arsenal to help when you're building innovative experience for customers. You want them to be able to have EMIs. You want them to be able to experience financial products. For example, what Zomato is doing these days, right? They're pushing out a credit card to help their customers deal better with food. So that's one broad theme we are seeing, embedded finance, where companies are springing up to help out other companies deal and push deeply integrated financial products within their own ventures. The other area of innovation is regulatory sandboxes, where we have seen regulators, especially in India, where we've even seen IRDAI, SEBI, and RBI push out regulatory sandboxes where a regulator will explicitly ask for companies to specifically do innovation. We have seen this in the context of UPI Lite, for example, where there was a lot of closed experiments that were done to before UPI Lite was rolled out to help this kind of innovation show up.
Are these regulations which are in the works also helping, countries become more interoperable when it comes to money movement? That was one of the big draws of crypto, right?
Hypothetically. Crypto has largely failed at this. Like one of the big themes of crypto was we'll allow international money transfers much more smoother, much more faster, much more efficiently, and that has not worked out really in practice due to they were essentially hit by the same set of regulations that already exist to make these that don't exist to create friction, but they end up creating friction because countries want sovereignty on data, international data transactions. But at the same time, interoperability is a big theme in regulatory tech. For example, with new innovations like ONDC and account identity framework, which I mentioned earlier, there are huge pushes towards interoperability in the fintech space. UPI worked out really, really well, for example, right? Having an interoperable bank transfer mechanism worked out well. And similarly, the hope is that these two be pushed out as well. On the other side, what you mentioned was countries interoperating in payments. SWIFT is still like the big wolf here, and unfortunately, while there's been some progress made in interoperable financial transactions in the regulatory space outside of crypto, it's not as swift as possible. For example, the RBI recently signed a deal with the Monetary Authority of Singapore to allow UPI to interoperate with the PayNow network in Singapore, which is a huge step forward. But these kind of things take much more time.
What about new umbrella entities? That's again a big thing which was in the news in the last 6-8 months.
So new umbrella entities was a pilot program by RBI to set up a parallel entity to NPCI in the hopes that we could have IMPS interoperable not just on the banking layer but also on the NPCI layer, which would enable other fintechs to have an real true alternative to NPCI. There was a draft proposal which was followed up a little bit, but it hasn't gone anywhere in this year. So hopefully we'll see that coming back in the next couple of years for real true interoperability to show up in the Indian fintech ecosystem.
And what are the other new things that we can look forward to?
So the most coolest innovation that's happening, or like the buzzword in the space, has been CBDCs, or central bank digital currencies. They're essentially the idea that instead of having cash or digital currency on a ledger, which is currently how we deal with banks, CBDCs allow you to have the digital equivalent of cash. So, for example, in India, it is digital rupee. It's the big hot word in the central bank space, where central banks are trying to create a true alternative to stable coins in crypto. And it's seen as a regulated way to provide the same kind of innovation that stable coins have. Unfortunately, it has been a mixed bag because a lot of people have called it out as central bank FOMO, which is, it does have one thing very uniquely in common with blockchain, which is both are solutions looking for a problem. We don't really know where the innovation is going to end up helping. We have some guesses, but we don't really know whether it will work out, which is in contrast to how other fintech innovation has happened in the past.
So are we seeing initial adoption somewhere with CBDCs?
Yes. So there are currently 15 pilot programs running across the globe in 15 different countries, including one in India, where India's CBDC implementation is currently on a retail side. It is being developed by NPCI's e-rupee, the e-rupee framework. And the core innovation, or like the core promise of CBDCs in general, has been this idea of purpose-limited money. So, for example, when you buy a gift card for, let's say, Xbox, right, it can be limited to just purchasing games. So, similarly, the idea of purpose-limited money is, hey, I can give you some cash, but you're only allowed to use it, for example, for medical expenses. And we've seen this in the past, for example, fuel cards, which will only allow you to be used at fuel pumps. But the idea of this being a monetary tool in the toolkit for a central bank is a big deal, because it lets them push out financial incentives and monetary incentives and do direct cash benefits that are much more targeted in nature. I can give you 600 rupees per month in your bank account, but can only be used to buy gas. Those kind of changes will let them have much more levers over how they deal with monetary policy.
Interesting. Now, how should one differentiate CBDCs from crypto, though?
So the core answer is how they're issued. Crypto stablecoins in general rely on an existing authority of a central bank as proving their legitimacy. They essentially act as a reserve currency, where you put in money in a bank and they'll give you out tokens instead. They're essentially IOUs, where you can go back, if you have enough of those, you can go back and redeem those initial currency, typically USD. On the other hand, CBDC or digital rupee or digital currencies is supposed to be created by directly issued, similar to how cash or currency is issued by the central bank, it will be issued in a similar manner. So the appeal to authority or how the legitimacy of that currency shows up is directly from the central bank instead. CBDCs are regulated, issued by the central bank. So their authority comes directly from the central bank, similar to how cash is issued. For example, in India, your cash has a sign from the RBI governor that guarantees you that sum, right? Similarly, CBDCs, once issued, are essentially taking their authority directly from the central bank. On the other hand, crypto is essentially unregulated casinos where you put out, when you go to a stablecoin issuer and you front them with money saying, hey, I'm giving you $15,000. Can you give me 15,000 IOUs, which is essentially what stablecoins end up being. And this because it is unregulated murky territory, we have seen stablecoin collapses in this year where it's not really clear whether the reserves holding that stablecoin are available or not.
With all of this, we're also seeing increasing action from regulators for violating norms, right? So how are companies dealing with that?
I think this is a big change that's happening, not just in the fintech space, but in like the big tech space as well, where we're seeing regulators pushing out for privacy violations in the EU or even similar violations in the US as well. And even in India, the Competition Commission of India has been pushing out cases against Google and Apple against antitrust. And we have seen RBI pushing out similar cases against large financial actors in India as well. And this is going to be true because we've seen fintech grow from a much more nascent industry in the last 10 years to a much, much bigger beast where even big tech companies have a much larger foothold, especially in the Indian fintech ecosystem, right, where GPay is one of the biggest players. And as a consequence of that comes liabilities and comes checks and balances from the regulator to ensure that the space is kept secure and open to all.
Interesting. Like I learned a lot from conversing with all of you, and it was really inspiring to see how fintech is being delivered in new ways in the country. And I can't be more excited about what to look forward to with innovation in AI, user experience, especially on the regulator side. So it's a really exciting space to be in, and we hope to see far more innovation going forward. And it's good that a lot more companies are jumping into this space, which also accelerates the pace of innovation. So maybe next year we have far more things to talk about, far more newer stuff that comes out, and I'll be excited to host you folks again next year, and we talk about what happened in fintech in 2023, right? So thanks for joining into this conversation, and hope you guys enjoyed. Please do let us know what you thought about it. Love to hear your thoughts.
Happy New Year.
Yeah.
Thank you.
Awesome.